Hello guys and welcome back to the channel. So I very publicly sold all my Tesla stock after their earnings call, and I tweeted about it, and this tweet ended up becoming one of my best tweets ever. It has been my best tweet ever. You can see it has gotten 132,000 views, which is very much for me. I've gotten a lot of hate, and a lot of people requested that I change my name to Vince Was Bullish. And I feel like I didn't explain well enough why I sold, or maybe people just didn't get it. And I kind of feel like I owe a video about when I would buy back Tesla stock, and the price dipped below $200, and is it time for me to buy back, and what would make me buy back into the stock. So welcome back to the channel. Please make sure you subscribe. You can comment also if you want. Let me know what you think. And if you are a person that gets butthurt every time they hear something bad about Tesla stock, please don't watch this video. This video is not for you. This is for people who are open-minded and who are not like fanatic cult followers of stocks, and who can take different viewpoints. So this is just to just to set some boundaries. So basically, I had an idea about, or had a thesis about Tesla stock, because I don't believe in necessarily being very robotic about numbers when you are evaluating a growth company, because a lot of times if you are picking a very good growth company, the company will grow a lot more than you think, and the company will morph into something a lot more than you could see from the present time. So case in point is, for example, if you had invested in Amazon when they were a bookstore, there is no amount of DCF or valuation or anything or mental logic that you can do that would make Amazon into what it is today. So basically, if you invested into Amazon at that time, you got very lucky that Amazon came up on AWS, and they ended up conquering the internet, and they went up into all these different verticals, and they became a giant. There was no way for you as an investor to know that at that time. And I believe that this is the case with many growth companies, and especially with Tesla, because if you invested into Tesla, for example, many years ago, they were just an electric car company. Then the self-driving came. Now there is Tesla Energy, then there is, robo-taxis, then there is, Tesla Bot, there is Dojo as a service, and there's still things developing, right? But my problem with the earnings was that I felt my thesis was broken. There is videos about it. I just want to keep a very distilled summary from this. So even though I don't believe in that you need to have a very precise valuation if you're buying a company for many years to come, I still believe that there has to be some sort of a connect. So what I mean is, if I think that if the company is expanding 30% year-over-year revenue growth, and they're going to have 15% profit, and this will give me 1 trillion in valuation, but everybody else thinks that the stock will go to 20 trillion, the disconnect is just too big, and that's a warning sign, right? So if I believe that the stock is going to go to 1 trillion and then it goes to 2 trillion, that can happen, right? And that's within a reasonable error rate in my opinion. So my problem, again, with the earnings call was that I thought that Tesla was going to grow on this line with selling their cars. So I thought that they're going for 2030, trying to sell 20 million cars, which I never believed in. I was always in my models taking it down to 10 million cars. But as more cars they produce, there is more cars on the road, and it has secondary and tertiary effects, because the more cars there is on the road, the more people that can buy FSD, the more robo-taxis that are available, the more services they can sell, and everything just gets exponentially better. But instead, on this earnings call, what I heard was that they sort of reached the limit where the interest rates are really basically messing them up. And they have lowered the price, which was all they could do. And even now, with the lowering of the price, they are not managing to get the demand up. So they're slowing down factories. They're going to slow down the Mexican Gigafactory. They are going to slowly scale. So this is also what people misunderstand. So I'm not saying that they will produce less cars. I'm saying that the increase of cars is going to slow down. And this is going to have this effect that instead of this graph, we're going to have this graph on the cars, which means that there will be a lot less total cumulative cars on the road. And that means that there will be a lot less people to buy FSD, a lot less cars to be available for robotaxis, and so forth and so forth. So this really significantly changes the valuation of the company. So I was a believer that the company is going to $10 trillion in valuation in the near future. But if you are not following this growth curve, you realize that you have a lot less revenue and a lot less profit. Look at the difference between these points. And also, if you're growing slower, the PE multiple that you should get is also much less. So you get basically a triple whammy of, valuation contractions. Then there's just no two ways about it. I'm sorry to say, that's how it is. And this is also what a lot of people misunderstand that watch my channel, is they think that I say that Elon Musk is a bad executive, Tesla is a bad company. No, Elon Musk is the best auto executive and the best executive that you can have. But he is not a superhuman, and he cannot do magic, and he can't make magically the interest rates and the effects of the interest rates disappear. I'm sorry, it's just that is the case. And I truly believe that the strategy that they're following of decreasing the prices is the correct strategy. There is no other way that they can handle the situation. They are pivoting. They are doing the exact right thing. So I'm not criticizing that, okay? The only thing that I'm saying is this amazingly good company with this amazingly good CEO is going to grow much slower than people anticipate for many, many years to come. And this has secondary and tertiary effects on the valuation, and people don't take that into consideration. So again, if you understand what I'm saying, that I still think that this is a fantastic company, then owning this company just becomes a valuation question, because I would love to own this company, but then the valuation needs to reflect all these changes, what I'm showing you. And I actually have a model that I put together. It's actually two different models. One I think you would say is super bearish, and one is more what I think is going to happen, and both of them give a price, and you can let me know in the comments how stupid you think it is. I'm sure that if you are a Tesla shareholder, you're not going to like this. So I'm just warning you, but please, if you are going to hate me in the comments, hate me with your model, with your numbers. Tell me why the logic is wrong. Don't just say, Vince, change your name to Vince was bullish. You're a trader now. So don't do any of this stuff. So I just want to quickly show you how this works. I set this up exactly as they report, as Tesla reports. You see that this is their shareholder deck for Q3, and you see that they have automotive revenues, energy generation and storage revenue, and services and other revenues. So this is the three main categories, and they are growing differently. The auto here, this is the growth rate that you see. And before you attack me, this is not the number of cars. This is the increase in revenue, because they are going down in price. So even if they are increasing, let's say, the output of cars by 20%, but they lower the price by 15%, it's only actually a 5% increase in revenue from the cars. And we know that there's Cybertruck coming, but after the Cybertruck, they are going to have Model 2. And Model 2 is half price, probably not half price, it's half the price to produce, but probably not half price to sell. But it's a much lower price. So even if they sell, let's say 3 million Model 2s, whereas they're selling 2 million, S, X, 3, and Y, the income is not going to be not even the double. It's going to be, so they go from 2 million to 5 million cars, but the income is probably going to go from, 40% up or something like that, because of the much lower sales price. So this is why I'm saying that the car revenue is only growing 5%. The energy generation and storage, I'm giving them 20% revenue growth all the way to 2030. And services and other, oops, I'm sorry that is jumping so much. I'm giving them 30% increase. Now, this does not include FSD, and I'm going to tell you why. Here you can see I'm giving predictions of how many cars they are producing per year. You can see that I'm having them go up to 5 million cars in 2030. Again, you can hate me in the comments. This is the more bearish version. But this could happen, right? Like if the interest rates stay high all the way in 2025, and they are barely starting to go down in 2026, then maybe they are not able to put more cars on the road than this. So then I'm giving them a total operating margin of 10%, which is exactly what they have had when the times were better. So I'm saying that I'm giving even leeway here in the model. I just want to point this out. And I'm giving them the 12% margin all the way to 2030. And then you have here the numbers. So this is their total net operating profit. That will be $22 billion per year in 2030. So if you slap a 30p on that, you have $669 billion in valuation. But as I said, it's missing FSD, and the reason why it's missing FSD is because we don't have a prediction when FSD is going to come. We don't know what the take rate is going to be. So I said, okay, let's slap a $199 monthly subscription fee for the FSD, and let's have a take rate on it of 15%. So that means that you take the total fleet, which is this number, so that's all the cars that have been produced added together, and 15% of these cars take FSD. And this is where you really start to see this effect, what I was telling you, that if they would be growing 3 million, 4 million, 5 million, 10 million, they would have much more of a market that can take up FSD, okay? Again, this is the bearish case. So I'm saying that 15% is going to take up FSD. And I know people say that FSD is 100% profit. It's never 100% profit. I'm taking 80% as profit because I'm sure that they will have some, hardware and, some engineers that they need to keep on it. And this will give them a total profit of 7 billion per year, which makes a total net income of almost 30 billion. And if you put a 30 multiple on that, you have 900 billion valuation in Tesla. And again, this is where I get so much pushback of like, oh, you're saying it's a shit company. No, I'm not saying it's a shit company. The valuation is still almost $1 trillion in 2030. And there is like 5 companies on the planet that is $1 trillion at $1 trillion valuation. So I'm not saying they're shit. They're still the top 5 company on the planet with this valuation, right? So now I go into, this is their shares outstanding that they have today, which is something like 3,200,000,000 shares. And I count with a yearly dilution of 3% on the shares. And even this is giving them a leeway, because if you go to stockanalysis.com, and you go into the shares outstanding diluted change, you can see that they've been diluting with 5.78, 5%, 4%. This was the only year, which year was it, when the dilution was less than 3%, and here it was 15%. So you can see it's a very kind calculation to think that they are going to be diluting with 3%, and then we are going to have this many shares, and that will give us a share price in 2030 of $230. Now I like to have a shoot for a desired return of 20% per year. Again, if they miss and I only get 15%, I'm totally okay with that. But this logic would basically allow me to buy Tesla stock at $64 or below. So this is crazy low, I know, but this is one entry point based on my bearish calculation. So now let's take a little bit more bullish calculation. So let's say that in 2024 they still grow 5%, but then they start speeding up the growth and they start growing 10 and 10 and 10% in the automotive segment. They're still growing 20% per year and 30% per year in the other segments that they have. And you can see here that I have them go to 15 million cars produced by 2030. So they have a much bigger volume of cars that can take up FSD. I'm still giving them 12% profit without FSD. So this would give them, without FSD, an $803 billion valuation. And this is important to look at because it's not sure that FSD will be ready by this time. I mean, I don't think that will be the case, but Elon Musk has been saying that FSD is coming next year since like 2016 or something like that, and we are in 2024. So soon 2024, 2023. So it's something that you should take into account, that what if FSD is not developed? I think the likelihood of that is very, very low, but it's a non-zero, okay? So I think it's a good way to look at it. And then here I'm giving them a 30% take rate on FSD. So that means that all the Teslas that are on the road, the whole Tesla fleet, 30% of the people are buying FSD monthly for $199 per month. And that would give a profit of 29 billion per year. The total net income of Tesla in this case would be 55.8 billion. You slap a 30 multiple on that, and you have a $1.6 trillion valuation, which is much higher than the valuation that we calculated before. And this doesn't have any robotaxi. I don't know how to account with that. You can hate me for that. Doesn't have any Tesla bot. These are all, in my opinion, like very lucky call options if they come through. So I get a stock price of $429. Again, same logic, 20% desired return per year would give me a stock price of $120. So based on these two calculations, I would say that for me to go back to owning Tesla, the stock price would have to be $100 or less. And this is my logic about it. I love Tesla as the company. I think Elon Musk is the greatest CEO of all times, or one of the greatest of all times. But there is a thing called valuation, and the valuation has to be right. And I don't have to own every company, even though I would love to own this company. So if the stock price goes below $100, I'm going to look at adding again. If it doesn't, then it was not meant to be, baby. So thank you so much for watching. Let me know in the comments what you think, and I'll see you in the next video. Make sure you subscribe. Ciao, ciao.